All right, so I thought I'd make this video now that I've put out a couple of trade ideas for this long, basically trade. I want to talk about why I decided to call certain levels support and why the patterns just keep repeating themselves. This is Arias wave. This is not Elliott wave. You can't use Elliott wave to do this type of trading. You just can't. Arias wave was created for traders, basically. So I use it myself. My analysis is based upon it. Um, Getting the counts right at the smaller degree is a lot easier than larger degree, as crazy as that sounds, because you've got a starting point, right? And when you've got a starting point, it's actually easier to understand what wave you're looking at. But when you're talking about long-term patterns, you've got to try and figure out where within the pattern you are. So I could use a couple of analogies, examples to show you where roughly where like cryptos are, for example, in the big scheme, because these patterns repeat. And as I've already proven twice, once this starts breaking up higher, is that how do I do that, right? And it's simply put the wave identification using RS wave. So the bigger correction here is a sharp correction to the upside. Um, a lot of basically bullishness is still in the market for this to push this sort of pattern up. It's pretty interesting. So I suppose I've started off with the A wave from the lows after obviously the big sell-off since the ETF event. Um, the 24th of Jan there up to the 20, basically, sorry, the 20, what am I talking about? 24th of, yeah, 24th of Jan to the 27th of Jan. We had a wave A, right? It took, what, 3 days? And then we had a small B. Why is it small? Uh, because there's so much bullishness. C wave. Why didn't it go so long to the upside? Because there was a 4-hour resistance on the 200 moving average. Um, the D wave, once again, the same reason as the B wave. There's a lot of bullishness, and it was also a rejection. Then we go to wave E, and because we already hit resistance, wave E will pierce through it. It'll break through it, right? For a couple of reasons. One, the retracement hasn't been that deep to the upside yet, and there's a lot of bullishness, right? So looking at that pattern when I saw it, I had a feeling, yeah, this is going to move up based on what I just told you in the previous videos. So if we just zoom into that area, I'll show you how the same thing is repeating over and over again, right? So here you have the wave one, small wave one, A, B, C, D. This is an E. Yes, it's an E, right? It looks like a zigzag, except it's not a zigzag, right? The subdivisions are not there. Plus, uh, it's basically a weird looking wave E because wave four correction expanded, right? The same thing happened up here. This is basically the same thing as what we're seeing. I'll just highlight this. This wave E bounced like that. It's the same as this wave E bounced like that right before it came back down and took off. It's the same thing, right? Um, it's just that it's probably getting smaller because the correction's getting shorter and because the move is sharper, right? So after we made that move up, right, we completed wave one of wave three, right? And then after that, straight away, we saw a different kind of correction for wave two, right? Same patterns. I'll go to the minute chart to show you, right? So let me drift over to this side, back to wave one of wave three, right? So we had a wave one, say 1, 2, 3, 4, 5. And then you might be thinking, right, what the hell is this? It's a wave A, B, C. Can you see? 1, 2, 3, 4, 5, right? D, hang on, let me just go a bit closer this way. D, right? Because there's subdivisions within the waves, right? E, another 5-wave move, weak, same as this one, right? Type 1, I call them, because the impulsive move or the motive waves are 3-wave, 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 3-wave. Here, 3-wave, 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 right? And then you get your initial move up, your little bounce. That's no longer part of this process here. This process this process for wave 2 ended here. We had a spike up. Oops, hang on. We had a spike up that broke the previous high back here. Just to confirm that, yep, we're ready for the next move up. So we had the next move up, right? We had an A, B, C, D, and once again, E, right? So that's why I said support is at 43,082, because you can move your stop up, which is essentially locking in profits, which then means you can add to the position if you want to, right? Using the profits or whatever the hell, right? The point is that you paid for, you've done it. Now for phase 2, right? Pat yourself on the shoulder, little win, big deal, move on. Now you take the stress off, and it's also not going to take as long as the first one, and it's also like kind of proven itself that, yeah, this is okay, this is going to move in that direction, right? Because this in itself is not a 5-wave move, right? What 5-wave move have you seen? Now mind you, this is a small degree, so the waves do look a bit weird. I mean, it's a 1-minute chart, it doesn't matter, it's all fractal, right? You know that. So you got to think about it this way. What kind of look, this is not a 5-wave move. This is not an A, B, C. See, that's the problem with Elliott wave. That's the way they think about it. If it was Elliott wave, you'd think, okay, that's 3, that's 4, and that's 5, right? Because it looks like it, except hang on a minute, it's going up again. Where do you draw the line? You see, with this method, I can at least use the corrective patterns that I'm seeing to know that this move isn't over yet. That simple thing right there is enough for me to use RES wave over anything any day, right? Because moves don't end with corrective patterns, right? They end with impulsive moves, and also you can use like moving averages to determine where you're at within that, uh, basically that move. Not just a 15-minute chart, right? Because it came back and used it as support, created a pretty large, weird looking like hammer pattern there. If you zoom in, that's a very nice, beautiful hammer pattern back to the 0.786, which interestingly enough is the same thing it did back here. It came back to the 0.786, right? Not because this is a wave 1, but because this is what people are looking at, and that's where the fibs come from. What people are looking at, basically. First move up, pull back, right? People don't give a shit that it's a wave 1, A, B, C, D, E. They don't give a shit about that, right? They just go pull out a fib, if it, 50%, and then it goes beyond it, below it, below it, below it. They'll get out of the trade. They think, oh shit, this is going to stop me out, right? I know from experience. So I've done not only Elliott wave when I first started years ago, but also in general, right? It kind of freaks you out when you're trying to use fibs. But when you understand the waves, the fib is just like some interesting little pointer there that kind of says, hey, this is like a line in the sand more than anything else. It's not really the key to my analysis, right? The key is the waves. Not only this wave, the beginning of wave E, but everything else before it, basically, right? It kind of sets the tone for, wait, what do we expect here? Is this complete? How do I know? Well, the corrections are expanding. Corrections expanding. Well, it must mean it must keep going. And then we talk about the larger degree, for example, right? The 1 hour, and we say, okay, what are other people looking at? They're looking at inverse head and shoulders potentially, and we've got maybe like a neckline break, and then maybe like measure from the neckline and then double that. Okay, great. Use that as a target, because at the moment I can't think of anything else apart from 0.618, 0.786. Hang on a minute. What was that about 0.786? Isn't that a common place that it goes back to? Well, it can be. And I think that we should just pay attention to the subdivisions of the wave to determine if that's going to be the case. But what else did we see when it came to wave ease? And this is a very interesting characteristic that I've started picking up on in recent times, is that at one point it does look like it's going to drop down, right? Just like we saw twice in those boxes I showed you, is it does look like it's going to go the other way, but then it comes back again, right? Why? That's why we've got to keep looking at the subdivisions, pay attention to what the hell it is we're seeing, because I think that's going to give us a clue as to what's going on here. And if we're going to roughly potentially move to 0.786 and we start to see something that's wave 1, 2, 3 done, and then a four's in progress, watch out for that wave 4, because it might look like it's going to go all the way down and then it'll come back up. Now, I'm not saying it's a bad idea to get out of the bloody trade about that point, because it's just going to cause you trouble. But based on what we've seen with wave E's, they're not quite usual. So, for example, you get to a certain level and you start to short this, and then it starts to come back up. That's when it basically uh, it psychs you out of the market. But then it turns around, turns around and goes back down, right? And I think that's exactly what these waves kind of do for whatever reason. I'm not sure, right? The real reason why it happens, but that's just the pattern, right? Now, if we understand that this is a wave E, we can kind of expect it, yeah, that might happen, right? But at this point, it looks like we're moving up, and I'll provide updates during the course of this. And you know what? I encourage you to learn the waves, because this type of thing is better than anything else for getting into trades. Um, it just gives you a different perspective on the market, and you can actually learn something whilst you're looking at that chart every day for hours on end, right? Because a lot of people just look at the chart and they don't really learn anything. They just look up and like things going up and down, the price or indicators or whatever, but they don't really understand what the chart is doing. Now, I got sick of doing that early on in the game. Like, that's when I created Arias Wave, because I started to really pay attention to what the hell I am seeing here, and also debunk Elliott Wave along the way. So here I decided to put it to the test, and also experience has also made me improve the way I do it. So definitely could teach people this stuff if they want to learn it. But yeah, look, let's just see how this goes. Thanks for watching.